Firstly, hello and welcome, and thank you for joining today's webinar. My name is Brendan Stats. I'm the CEO of TMK. So during today's webinar, I really want to focus on just three areas, and these being the details of the share purchase plan, which is currently open to eligible shareholders. I want to provide an update on the current operations, and then also discuss our work program going forward for the year. We'll be referring to our latest corporate presentation, which was published on the ASX on the 25th of March, but I won't be going through all the slides. I really am going to just try and provide a high-level introduction to the company and the Gurvantes project for those new investors, but then focus on those three key items that I mentioned, which I think most investors will be focused on. So I'll try and talk quickly and just for about 10 or 15 minutes, and then open up the floor to answer any questions you might have. I think the Q&A is a really important component of this because it allows me to really address any specific questions or items anybody would like to go through. So please, as I go through the presentation, if you have any questions, please type them into the Q&A section, and I'll get through as many as I can at the end of today's presentation. And also just a reminder that I'm always happy to answer questions as best as I can at any time. So not just today, but if you have any further questions anytime, please go to our website and submit questions through the email provided on the web page. All right, thank you. So TMK Energy is 100% focused on the Gurvantes coal seam gas project in Mongolia. And these highlights are really why. So what do we have in the Gurvantes project? We have a world-class coal seam gas project, and that's in terms of the size of the project, but also the quality of the project. And one which has some key technical advantages over some of the most developed coal seam gas fields worldwide. So we already have an existing contingent resource of 1.2 trillion cubic feet of gas. So to try and put that into context, that's in the order of about $13 billion worth of gas. So very significant. That could power all of Mongolia's power requirements for centuries. And so it's a very big prize. And that's, I guess, why we're in this sort of frontier basin exploring, because of the size of the prize. We have the largest contingent gas resource in Mongolia by factors, and worth keeping in mind that our contingent resource number is only from a very small part of the project, from a very limited amount of drilling. So, as time goes, that number will only grow. The rest of the project is very prospective, so plenty of upside there. And the other key feature of the project is it's located in an energy-hungry part of the world where gas is highly prized. So, I think it is a case of right place at the right time. So today, in terms of the investment opportunity, we are sitting on a giant gas resource in the ground, and the key milestone or catalyst this year is demonstrating that we can get the gas out of the ground at very attractive commercial rates. So that's really the focus this year and the major catalyst for the project, the company, and even Mongolian energy industry more broadly. So just to remind everybody where the Gurvantes project is, it's located in the South Gobi province in southern Mongolia. It's around 20 kilometers north of the Chinese border, where 20 kilometers from a border crossing, where half the coal that's exported to China goes through that border crossing. And it's close to that existing gas infrastructure in northern China. As you can see on the map there, the major west-east pipeline runs across northern China, bringing gas from 3,000 to 4,000 kilometers away. So in terms of the location, there's a real need for energy in this part of the world, both domestically within Mongolia and China. The South Gobi province itself is really the center of the mining and resources sector within Mongolia, with multiple large mining operations in the South Gobi there, with very high energy demands. And these are located close to the Gurvantes project. And probably the most well-known example is Rio Tinto's Oyu Tolgoi mine. So really, really high energy users located close to the project. But then, China is the world's largest energy market and currently imports huge volumes of gas through pipelines from thousands of kilometers away. So the location of the project, 20 kilometers from the border, is a key advantage in terms of cost of delivery to the market and therefore commercialising the gas. Just a quick corporate snapshot and a couple of key points I'd like to make on this slide. Firstly, board and management hold about 36% of the shares, so plenty of skin in the game, and therefore highly motivated to create value and get the share price moving in the right direction. Also, in terms of the current capital raise, all members of the management team and 3 out of 4 directors participate in the capital raise. So I think it's good to see board and management showing confidence going forward by dipping into their own pockets, and that should give other investors confidence as well. But it is worth noting that the share price has been under a lot of pressure over the last 12 months, as you can see from that chart, which doesn't look too good. But I don't think this is a fair reflection of the significant progress we've made on the project or the fundamental quality of the asset. But it's probably more of a product of a combination of factors. But a key one being, I think in December last year, when we brought the Gurvantes project back to 100% within TMK, we issued 1.1 billion shares to our former JV partner, Talon Energy. And a lot of those shares have subsequently been sold and on the market over the last 3 months, which has put the share price under a lot of pressure. But I expect we've worked through most of that overhang now. So onto the current capital raise we're currently completing, where we aim to raise up to $4 million and really to fund the work program for this year. So there's 2 components to the capital raise. There's a placement, which we recently completed. So that raised $2.5 million from new and institutional investors. And the second component of the capital raise is a share purchase plan, or an SPP, which to raise up to $1.5 million. And so that provides existing shareholders with the opportunity to participate in the capital raise on the same terms as a new and institutional investments who participate in the placement. So I think providing that opportunity to shareholders was really important to us, given the current share price, the low share price at the moment, and the exciting stage of the project. So hopefully all shareholders are aware of the opportunity to participate in the share purchase plan, but I'll just run through a few of the details. So eligible shareholders can apply for between $1,000 to $30,000 worth of new shares on the same terms as the placement. These being, each new share is priced at 0.4 of a cent, but comes with a free attaching option, a 1-for-1 option. And so those options will be listed and have an exercise price of 0.8 of a cent and a term of 3 years. And so I think, given where the share price has been historically, and the work program taking the project through some key milestones this year, I think there's a lot of value in that option. So if eligible shareholders want to participate in the share purchase plan, applications need to be received by 5 p.m. next Monday, on the 6th of May. So that's probably important to keep in mind that it closes on Monday. So only a few days left to apply to participate in that share purchase plan. I'm just going to skip ahead through the presentation just to really focus on giving an operations update. So where we're currently at the moment with regards to the Gurvantes project. So the key focus is operating the existing pilot well program, which incorporates 3 production wells that we drilled last year, in the middle of last year. And we drilled them in the center of Narran. The area is called Narran Sukhite, and that's where the 1.2 trillion cubic feet contingent resource is. So these 3 production wells have been online now for about 8 months, and in summary, the results so far are very positive, and have only given us more confidence in the technical aspects of the project. But basically, we would know very early on if the pilot well program was a dud, and we probably would have shut up shop and moved somewhere else. But there are a couple of key things that early on you want to see from the pilot well program to give you confidence you're heading in the right direction. As on the slide, the first one really is flowing good water rates, because the water rates you produce is indicative of the gas rates you'll get. And so we've had good water rates from the 3 wells. We had a peak water rate of about 650 barrels of water per day from the 3 wells combined. And now we're down to around 400 barrels of water per day. So that's very encouraging. As a first step. Again, the next one is important because you can pump as much water as you want, but you need to be able to see that you can bring down the reservoir pressure, so you can effectively dewater the coal seam, which is the key job of the wells. And so we've made significant progress in terms of depressurizing the reservoir, and we can see that we're currently still making progress. Every day the pumps are on, we're reducing that reservoir pressure or dewatering that coal seam. Nice and slowly. So we haven't flatlined, so to speak. And the other encouraging aspect is seeing some gas flowing from the pilot wells, and just essentially it's there, and that it's movable and you can get it to surface. So gas has been flowing from each of the three wells for about 6 months continuously now, but albeit at low rates. And the rates we're currently seeing are not indicative of what the rates will be when we can bring that reservoir pressure down to the required pressure. But anyway, still good to be flowing, continuously and consistently gas rates. And I guess the other key thing is you need to be able to operate the project, which isn't necessarily that straightforward in the middle of Mongolia and through a pretty harsh winter over there. But we've seen very good performance, specifically over the last quarter, so the last 3 or 4 months, where we've been running non-stop, and that's through the harshest of the winter conditions there. So, the equipment, the personnel, the design of the project, all seems to be working, and well, we've kept it working and working very well. So the other thing we did earlier this year was we commissioned an independent technical review of the pilot well program and the project more broadly. And that was carried out in February. And that was really to get some other, external expert eyes across the data and the results. And in summary, the review confirmed our understanding of the project that, it has world-class potential, and we're on the right track to unlocking the potential. And we're making significant progress. So overall, we're very happy with the performance of the current pilot well program. It's been well designed, it's being operated successfully, and it is producing good results and very encouraging. But I think what people want to see is commercial gas rates coming out of the top of the wells. And so just firstly, the key reason why we don't have commercial gas rates at the moment is because the reservoir pressure is still too high. Which means there's still too much water in the coal seams to allow the gas to flow to the well bores. So the current pilot well program, when we did testing in February this year, we measured the difference we've made in the reservoir pressure, and we can see that we've reduced the reservoir pressure by about 500 kPa, which is in the order of half or 3/4 of where we need to get to. So we've done a lot of the hard work. We've reduced it by between 50% to 75% to get it to where we need to get it to get the gas rates to kick. So we have made significant progress. But we don't have that. We're not quite there yet. So that talks to our planned work program for this year, which is really, as I mentioned, 100% focused on delivering commercial gas rates from the pilot well program, and to give it a hurry along as well. And so the plan is to drill an additional 2 to 3 production wells into the same area to basically suck the water out quicker, get the reservoir pressure down below the critical desorption pressure, and get those gas rates to kick. And really, that's our focus. And until we hit that milestone, that will be our sole focus, really. So the additional 3 pilot wells, or 2 to 3 pilot wells, they'll be drilled in the same location, incorporated into the same pilot well program. They'll be of a similar design to the existing 3, which have performed very well. And we are confident that this work program, we stick these additional wells in the ground, and we will deliver commercial gas rates, which is very significant when you're sitting on a giant gas resource. So I think it's a real catalyst or a game changer for the company. I just want to add also that the approach we're taking is typical of a successful CSG pilot well program in that they do take time to bring the reservoir pressure down, to suck that water out, and typically do require additional wells in some sort of staged approach, which sort of mitigates the risk, because if you drill too many wells at the start and you don't pump good water rates, or you can't bring the reservoir pressure down, and you've done your dose. So there is some advantage to doing a staged approach, but this is typical of a successful pilot well program, the steps we're taking. So I'll just get back to focusing on that 2024 work program. So as you can see there, the key aspect is really drilling those additional 2 to 3 wells, accelerate the dewatering of coal seams, and get that gas to flow. So that's why we're raising the money, and what the money from the capital raise will be used for. And now being funded with the placement component, the $2.5 million we successfully raised complete. Now we're funded it allows us to execute the program. So we've kicked things off. We've ordered all the critical long lead items already, and scoped out all the other long lead items and commenced a tendering process for the major contractors, being the drilling company. We've commenced that process with a view at the moment to start drilling in July. So as the long lead items arrive and the contractors are lined up, we expect to be able to provide more definite timeframes around the drilling program, but all's on track at the moment for drilling in July. And then once the production wells are drilled and up and running, we expect to have some exciting results from the pilot well program within, in months really, and all going well. Hopefully we're adding a lot of value to the project and the company. When I talk about value, flowing commercial gas rates to the surface, I expect to open up a number of opportunities for TMK. It does allow us to understand the production profiles of the project, which means we can do feasibility and feed development studies and understand the project economics, which we expect to be very attractive. Other milestones will be getting a reserves estimate required. So we need to flow commercial gas rates to enable us to get a certified reserve, which is something very valuable. You can put a dollar value on that. The other aspect is as soon as we're flowing the required rates of gas is really early commercialization of that gas, and we're not talking from these 3 to 6 pilot wells that'll be going. We're not talking big numbers, but getting some revenue in the door will be important. And the early commercialization opportunity really talks to putting the gas that comes from the pilot wells straight into reciprocating engines next to the wells and connecting it to the local grid and providing power to that local grid, which supports the 4 mining operations and that surround the pilot well program. And that power is desperately needed and eagerly awaited. So that's a very simple commercialization opportunity, which we will focus on as well. And then the other one is engaging a potential strategic partner, which really talks to being able to provide a clear pathway to project development. On success with these pilot well programs, we have very big plans for next year, all going well, and so. We the options around how we can. But something we want to engage with and work towards the end of the year. So I'll just leave the presentation component there. There's more information in the presentation, which I hope people will review at their leisure. It's available on our website and through the ASX. But I thought now is a good chance for opportunity for Q&A session, so I can address any specific questions or issues people have. Just stop sharing the screen and go into the Q&A. And the other thing I'll encourage is, so existing shareholders, if you'd like to participate in the, I think there's a real opportunity at the moment to participate in the SPP. I think it's good value at the moment. It goes towards funding the project. So I've just got a couple of questions coming through. So I'll just read out the questions and then try and answer them as best as I can. So the first question is, what are this year's pilot volumes compared to last year? So early on last year, when we're getting gas flows up, we saw the gas rates were very volatile. We had some big peaks and some big troughs, and I guess what we're seeing at the moment is stabilised gas rates and at around 5 MCF, but that's consistently flowing and it is increasing, but day in day out, but increasing slowly. So. The gas rates we're seeing at the moment, it's always good to see gas coming out of the wells, but they're not indicative of what we expect the gas rates to happen when you actually get the reservoir pressure where it needs to be. And that's where we expect to see gas rates not just increase incrementally, but there will be an exponential kick in the gas production, which is what you typically see from coal seam gas pilot well programs. After a period of time, you reach the critical absorption and those gas rates take off. So we're not there yet, but we're on track to get there. And these additional wells will only help us get there quicker. So that's the focus this year. Next question is regarding So the question is, what are the long lead items to be able to engage in power generation and gas commercialization? Yeah, so in this stage, when we're talking early stage commercialization, we're really just talking about the gas coming from the pilot wells and turning that gas into electricity and putting into the local grid. So one of the reasons the pilot well program is where it is because there was a diesel power station or diesel gensets set up 50 meters from where Lucky Fox 3 is, and connected to the local grid, and that was powering that local grid for some time. And so the idea is to put gas reciprocating engines, which are modular. They come in shipping containers. Yeah, very straightforward to get out of Mongolia or China, or yeah, simple to get, and they're really plug and play. So you can get we're sort of looking at 0.5 megawatt to a megawatt units in a shipping container, however many megawatts you need. You just plonk the shipping containers down. The gas, you just take a bit of the moisture out of the gas, and the gas goes straight into the reciprocating engines. And then it's basically very simple to connect that to the existing grid, which is 50 meters away from Lucky Fox 3, for example. And on that grid is the 4 mining operations, so with a very high energy demand, as well as 2 local communities, which are outside of our project area, but connected to that grid. And so all those operators, they're desperate for the power. The current power supply is unreliable, expensive, and so they're eagerly anticipating that power. And we'll get a lot of support in terms of putting that gas into electricity and converting it to the market. And really, the only long lead item for that is the gensets, but they're readily available. Next question is, what does it take to get the water pressure down by the remaining 25 to 50%? So there's only 2 things required. It's time and/or more wells. And so, currently today we're still pumping water, and that reservoir pressure is dropping, but it is dropping slowly. So, we could get to the required reservoir pressure with the current pilot wells, but that's probably not a time frame that we'd like, because like all resource projects, it's important to move them forward and move them forward quickly. So really, it's just the number of wells and time. That's all that's required to get that reservoir pressure down. And and I expect once we put the additional wells in, it's the time frame is months, because it should really give things a kick along. It should make a real difference to the amount of water we suck out, and how quickly we reduce the reservoir pressure. The next question is, with the China border so close, can a Chinese company access the resource from China? I'm not sure if that's referring to, can they drill long laterals into Mongolia underground and suck the gas out? And the quick answer to that is no. Or is it answering, can they access the resource once we produce it at the surface? And as I said, we're surrounded by operating open-cut coal mines, and that coal is directly shipped to China, to the border of the track. That's a similar scenario to what we expect. We produce the gas there, and then either sell it at the wellhead or move it the 20 kilometres to China, and a Chinese group or partner can take it from there. So to supply the Chinese market, the project has to have scale. And 1.2 CCF is the scale required. TCF is a lot of gas, and that'll our job at the moment is to prove up the quality of the project, the scale of the project, and also de-risk it technically. And that's what producing commercial rates of gas to surface does. The next question is best guess. So it's one of those things. I'd love to give a day. I'd love to know for myself, but with these things, it's difficult to put a date on it, because we've got to execute the program well. We've got to do a good job of drilling the wells and then turning the wells on. there will always be a range. No two wells will produce the same amount of water rate, and so we expect it to be the new wells to be in a similar performance to the existing wells. But we have to wait and see there. But I guess when you add two or three wells, you're sort of doubling the capacity of how quickly you can take water out. And so I put it in. I don't think it's weeks, but I don't think it's years. So I think it's in that months before. And by gas to surface, we're producing gas to surface at the moment, but by gas to surface, I presume we're talking about commercial rates here. And so I think it's I think the expectation should be months before you see an exponential increase in the gas. So the next question is, what are the strategic gas sales opportunities if big volumes are demonstrated? So coal seam gas is to some extent, early commercialisation, which is relatively straightforward, is providing power into the local grid, and that's a market of 40 to 70 megawatts, which is pretty good. But the second market, and which talks to the second stage of development, is really supplying gas into the domestic market, and there is no gas production at the moment. Will be the first energy source. And if we talk about the domestic market in Mongolia, there's a number of opportunities there. The country struggles with energy security, reliability, independent for new energy, cleaner energy, domestically sourced energy. So there's huge opportunities within Mongolia, but I think the most obvious one is these large mining operations in the South Gobi, because they're a point market with high energy demand, and relatively remote, and gas can really play an important part. And those surrounding coal mining operations, they're regularly talking to us about when we can give them power. But then Oyu Tolgoi, for example, the Rio Tinto, third or fourth largest copper mine in the world, they have a huge power demand, and they're required to source that power domestically. And currently they've got a power line in from China, which is in breach of their operating conditions, and that power bill is in the order of 300 million US a year. So there's real markets in Mongolia for this gas. But the biggest opportunity is, for a very big gas project, is China. China's the world's largest energy market, but they import significant volumes of gas, and they get it from high-cost LNG, which comes from the coal seam gas fields of Australia, which is liquefied, shipped, and then regasified and put into their network. But they also pipe it in from Russia and Turkmenistan and Myanmar. And some of those pipelines are 4,000 kilometres long. And so that has a cost of delivery, but also some risks there about getting your gas from Russia and Turkmenistan and transiting across a whole bunch of stans to get it into the market. And so 20 kilometres across the border is, there's advantages there from geopolitical reasons, but also just purely cost of delivery. So they're the three markets. There's the early market, the domestic market, and then the big and the Chinese market. Next question, sorry, is can you provide any indication of interest from partners interested in commercialisation? So there's nothing rock solid at the moment that we can provide any update on, but there's regular conversations with groups who are interested, and particularly in the Mongolian domestic market, where if you visit Mongolia and talk to these groups, you can see that there's a real need and appetite for bringing some sort of reliable and domestically sourced power into the market. And so, particularly for that domestic market, there's a number of groups who are very interested in commercialising the gas. But we don't have anything rock solid at the moment. We have got MOUs with several groups. Several groups are interested in looking into the project, the data room, and things like this. But I think it's going to be a process as well. And these things take time. But as I see in the chart, but engaging with these groups takes time, and now's the time to do it, because we expect to be producing commercial rates of gas at the end of the year. So the process starts now, and so hopefully when we flow commercial rates of gas, we've got the things lined up. And we will obviously keep the market informed of any material developments in terms of strategic partners if and when those relationships develop. So the next question is TMK planning on additional exploration drilling? And so I guess this talks to it really being focused. So in the first instance, we're really focused on executing the pilot well program, drilling the additional wells, and getting those commercial gas rates. All things going well, yes. If we had the capital, there's a whole bunch of other work we'd like to be doing, additional pilot well programs, exploration drilling. There's a whole lot of work, but I think we can do that after we achieve success from the pilot well programming. So we do have a very modest, low-cost exploration program planned for the end of the year after successful execution of the pilot well drilling, the pilot well program. Sorry. And I will say that we've only really scratched the surface of the project. We've focused on roughly a 40 square kilometre area called Narrabeen, but we know from our experience. I've worked there for 12 plus years. We know from experience working on the ground there that there's very prospective areas along 120 kilometre strike to the east of us. So I'd love to get stuck into the exploration drilling, but we've got such a big resource base at the moment, 1.2 TCF, that the value, the rates. The next question is there much interest in TMK's activities by potential gas buyers within Mongolia International? And I think I've sort of answered that already, but yes, there's a lot of interest in Mongolia about TMK's activities, and with a view to using that gas domestically. It's fair to say we have relatively high profile in Mongolia, probably more so than Australia, but there's a lot of interest, but there's a lot of people waiting on the sidelines, waiting to see, because no one's ever produced commercial rates of gas out of the ground in Mongolia. So maybe rightfully so, there's some cynicism about whether it does work. And I guess that's the case in all these emerging basins, and was the case in Queensland 15 or 20 years ago, when theoretically it could work, but people had to demonstrate that it can work, and then the value of the project really took off. So I say there's a lot of people watching the project eagerly, and I think wishing us success. The next question is, what is the probability of not being able to sufficiently decrease the water pressure to commercialise the gas once the extra wells are put in? So that's a risk. It's a risk with all CSG projects, is that you can't decrease water pressure, for that we can't depressurize. We are seeing progress. We're still seeing progress in the water pressure, and we've made a big impact on the reservoir pressure. So the extra wells are just there to get a kick along, and I expect it'll be able to deliver things, particularly if the wells don't work effectively. But based on the results we've seen, get us to that point. Next question, is will the extra pilot wells be vertical wells like the existing 3 wells? And are there any design differences in these wells to the first 3 wells? So the simple answer is no, they're going to be vertical wells, which are the cheap, simplest technology wells you can drill, and they're shallow, so they're very cheap and easy, and lower risk to drill. And there's no significant design differences between the first 3 wells and the additional 3 wells. The first 3 wells, all in all, are performing very well. 2 of the wells haven't stopped running. They've been running continuously now for 8 months, so that's very good, and good water rates, seeing everything we need to see from them. One of the wells, we had some problems with the pump clogging with fines, but again, that's sort of typical of the early days of bringing a well online. So, but its performance has been very good in the last quarter. So, there's no significant design differences in the additional wells to be drilled. But going forward, there's always a way to optimize coal seam gas projects, whether that's with stimulation or laterals or angled holes. So all these things will be considered in the project development stage. But the approach at the moment is to take the lowest risk, simplest approach, and which, based on all the work we've done, will do the job and deliver us our goal. So that's it for the questions, and we've been going 40 minutes now, and I've got a message here that my camera's frozen, so hopefully it's got me to a good moment. So anyway, I guess I'll finish with thanks very much for joining the webinar today and your interest in TMK and your support of TMK. And if you're interested in supporting TMK further, the current the share purchase plan for eligible shareholders is open and it closes on Monday. So got to be in quick. But anyway, exciting period coming up, drilling these wells and delivering a key milestone later in the year, hopefully, and catalyst for the project. So okay, thanks very much. And